Hello everyone, hope you're doing great and I hope you have gone through the video of trends and you have practiced nicely. And in today's session, we will be starting with SNR and buyers and sellers area. And during this session, I'll also be explaining you the angles of trend versus SNR, reversals and consolidation. So in the last session, we saw how the trends make wavy patterns. So accordingly, we have to understand those wavy patterns from that session. Okay. And once we have understood that wavy part of the trends, then you could easily identify that the trend moves in a wavy direction, that is because of the momentum, and that particular momentum does not shift directly into a reversal like this. Okay. Usually when you're coming into a wavy kind of session, the waves will come like this. Since there is a momentum and it's a flow, if the flow is smooth, they will first consolidate and then they will reverse. Okay, so it's just like a kind of curve that will form every time. So the price will be moving like this or over that wave, and it will eventually, when it comes, it will consolidate. That is where we will see red green candles simultaneously, and once it hits that angle, that curvy angle, the price will start reversing. So this is what we have to understand from the previous session. How does the price moves? Okay, so in today's session we are going to understand about the SNR. Now if you see, SNR is support and resistance, and just for basic information, support is a point from where if the price hits that point it goes up, and resistance is a point from where when the price hits that point it goes down. Now if you see, the price movement is always like this, right? We have seen that in the previous sessions. The price movement is always up down, and it follows a trend. So at every point we have a support and resistance. At every point we have a support and resistance. That is why the price keeps on moving like this. What we have to do is, since we are going to trade with the trend, now here I want to differentiate us from a different type of traders. Now I am mainly focusing on a trend direction traders. Okay. Now it is not a typical SNR trader. A typical SNR trader will wait for different points of support and resistance until the price doesn't hit that point. He will not trade. He or she will not trade because they are SNR traders. They are well versed with the points where the price will reverse. In our case, we are focusing on the trends because our price action and our wavy pattern, all we have learning because we want to understand the trends. So we are not going to focus on the typical high and low points here. We are going to in fact focus on these kind of pullbacks to basically win this particular trade. Or it could be 1 minute, it could be 5 minutes, it could be 15 minutes, whatever. So our focus is on 1 and 5 minutes. So we have to follow the trend, and we have to use the SNR, but we have to use the SNR for our references to be safe, that I don't trade at this point on an up direction because I will lose this trade because the trend is slightly, my wave pattern is slightly curving like this. So the price is going to turn here. So I should not trade at this point to go up, an up direction trade. So that is where we have to find out the spots, SNRs, strong SNRs, and we have to mark our points to be safer from them. Other than that, we have to follow the trend always. Okay, so that is how our trading style is going to be. If you are learning my videos, so if you see all my videos, I'm trading based upon trend. Now sometimes what happened, when you know this point 100% sure, you're sure that at this point previously the price has reversed, you will go against the trend, but actually you are not going against the trend here. Let me explain you in detail. Look, whenever you are a trend trader or an SNR, or sorry, let's say you're a trend trader, when you're hitting the maximum resistance level, if you're sure that this is a maximum resistance level, you will go against the major trend, but you're going towards the minor trend. So you're not going against the trend anywhere. If you go against both the trends, you will lose the trade. Okay, so if someone is going against the trend but still he is winning, that means he is going against the minor trend, not the major trend. Sorry, he is going against the major trend, but he is following the minor trend at least. So every time we are following some trend, that's why we are winning the trade. If we do not follow a trend, we will lose that trade. And one direction of the trend from the last video you would have understood, there are three directions. One direction is uptrend, in which the price moves like this. One is the downtrend, in which the price moves like this, and another is the consolidation area. So this is actually the curvy part. So the price won't, sorry, let me draw that clearly. So the price won't immediately reverse. Price will consolidate for some time. In a regular trendy chart, if you see, price will consolidate before it reverses. Now there are some instances where you will see the price comes down, 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 and suddenly it will go up. That is because of the news event or something that has occurred into the market. Suddenly the sentiments of people, it will raise up. So that's not a place where our trends will work, and those kind of places it's a risky to trade, and sometime we may lose also. Okay, so it is not that you will always win the trades, because sentiment is something, like I told you in my previous session, people sentiment and psychology might change, and we don't have any kind of mathematical calculation to calculate that. Okay, so let's go into the chart and see how we are taking our trend based SNR. Okay, if you would have seen my SNR video in the free course material, that is the typical SNR method which I have explained there. Now let's take a chart. First of all, since we are trend traders, you have to make sure you're not taking a choppy chart. A choppy chart in sense, you should not have wicks at both the ends always. You see, there are wicks always both the ends. Sometimes there are no wicks, but again, if you see the wicks, there are so many wicks here. Example this. So this is a choppy chart here. Better not to take this kind of chart. We will take a trendy chart. Now this chart has been trendy. Here you have lost the momentum. Again and again I will stress momentum then and there. So this area is not good. This area looks good. So as per our trend concept, our SNR, what I usually study the the price is like this. I take the lowest body, that is the lowest open point, to the highest open point, highest open or close point. If this candle was bigger than this, I would have gone with this candle. So I'm taking the body, I'm not taking the wick here, and then I will draw a center line. Okay, now this is my center line. Now when we see this as a center line, what happens is, look, the price is reacting here, and let's see if the price has again touched it. No, the price never touched it. Okay, so it has touched only one time and it reacted. So this is the center point. This is a kind of support and resistance for me, and this is a kind of support because the trend was uptrend, and my extreme point where I will not trade is this, and my extreme point where I will not trade is this. That is, in this area I will not trade, and in this area I will not trade, because here the price might reverse. Okay, and this is my center point. Keeping this as center point, I have received this. So I've seen that price has reversed here, and as I told you yesterday, in a typical SNR concept, what happens is people will take this point as SNR, right? But our understanding of price action is a little bit different. You have to focus. Yesterday also I have told the term dig. So what happens when this half is broken? It is digging into the seller's area. Okay, and the sellers came. The selling orders came. But the selling order again digged into the buyer's area, and then I am seeing a stronger buyer order, stronger buying order. and my major trend is also uptrend at this point. If I take only this scenario, let's say from in this area, my major trend is uptrend. My major trend is uptrend. This is my major trend is uptrend. Okay, and and in this minor trend, when I'm seeing a weak candle of sellers, major trend uptrend, and a strong candle from the buyers, so it is obvious that this is showing a kind of engulfing pattern plus. So the next candle would go up, and it has touched new high. This candle is far more bigger than this candle, so this is a clear sign that this is as soon as the buyer's area was touched, it was rejected and the next candle went up, and that was a very strong. It's a clear sign that this is a retracement candle. So this is a pullback, and then it has started going up. Okay, so this is why I would consider this as my SNR. Just a moment, close this. Okay, so this is my SNR basically. So I consider the SNR like this, and this will work always, because you are picking up this SNR not based on the previous candles. Look, normally when you pick a SNR, what you will do, you will take this point, you will refer the history chart. Okay, at this place, okay, it has reversed, and then you will draw that line and you will come here and wait. But we don't know whether this trend is strong or weak. If you keep waiting until the price will touch here, the price might sometimes not even touch here and move away like this. So how do I chase the price with the SNR? So this is the only way where you can chase the price, because this current loop of the trend is showing you the price momentum, price movement, price volume, everything is shown here. And what you can do is you can take a half point of this. Okay, and when your major trend is uptrend and a candle breaks the half line, just wait for the buyer's reaction. Okay, once in the major trend is uptrend and the sellers are able to break the half point of this, just wait for the buyer's reaction. Don't immediately take a trade towards buyers. Okay, you have to wait for the buyer's reaction. So as soon as this broke, you see we saw two candles, but both were smaller candles of buyers. So then we saw one red candle, so we can trust that this will go at least till this level. But it didn't go, but at least it followed two candles, and we made it. Here, if you would have taken a trade after seeing the sellers coming even after breakage of this half point, we could have taken this candle as our trade. Okay, so let us try this in any other chart or any other spot. Let's see if this works or not. Because why I'm asking you to test this, because this is a different kind of SNR. You might have not seen this similarly in any other videos. Normally people will take the bottoms and the tops of SNR, but here we are going with the loop. So you have to practice this. This might be a new concept for you. Some may not understand. So what you have to do is you have to go through this video again and again to understand this. Okay, you see this is my center point. Okay, or let's take the highest and the lowest point better. So this is my highest and the lowest point for this area, or you can say even this is my highest and lowest point for this area, and this is my center point. Now when you see a pure rejection or a kind of hammer candle forming, this also I wanted to tell you, when you see sellers coming and hitting here and you're seeing a strong rejection from this area, you can directly take next candle in your trade, because this is an uptrend and I am in the halfway point, and in the halfway point I am seeing a rejection from the buyers. That means it will follow up. Now the top point and the lowest point is also you have to consider, because you will not trade at that points. So you have to take the top point and the bottom point, because at this point anything could happen. The candle could break this trend and candle could reverse, or the candle could dig again, the buyers could come. Similarly here you see the buyers came, and exactly at that candle the sellers tried to penetrate, but again buyers gave a pressure here. So we saw a wick, So in the week session we will also discuss this, but today you have to understand that this is a buying pressure, because after it touched the half line, sellers came down, sellers brought this price down, but the buyers pushed it up. Okay, so this is more into deep. Now if you want to simply, don't go into this much of deep matter, then what you can do is, I'll tell you, the next strategy would be something like this. Okay, let me take a loop. We should have a good trendy loop to trade also. So okay, I'll take this loop. So this is the highest point from the body to the body, and this is my half point. So you see, as soon as it's hit the half point, we saw a rejection, but the candle, because again here the trend is uptrend, so you cannot consider this as a strong candle, because this candle is smaller than this candle. Okay, and this candle is having a lower wick also. That means it is saying as soon as the buyers touch the halfway of this loop, sellers came, but sellers were not able to penetrate, were not able to engulf this buyer. So the power at the half point of sellers is less. At the half point of this loop, the sellers are weak, and immediately the next candle you are seeing is a green candle which did not touch again here. So you have a gap here. Since this is a strong momentum, now yesterday or the previous session of trends, I might have told that if you see number of candles like this, that means this is a strong trend. Now from this we can understand that this is a strong trend, and there is one buyer's and a seller's entry, but the seller's entry is much weaker than the buyer's last candle. And we are also seeing another candle which is green, buyer's candle, and it did not touch the half point. Strong trend, pullback, and going up direction. So this is a up direction. So in this candle you can take a call option, because at least this candle will close here, because we know now the sellers are coming from this point, but this candle closed here, no big pressure of sellers. This candle is almost like a full strong candle, because there is no strong pressure from the sellers to push it down. So you can take this candle as your trading candle. Only after, when the strong trends come, they will somehow break the SNR level and then they will reverse. So that is what has happened here. Strong trend came, there was a pullback, but again they broke this level and then they reversed. Okay, so here again, when the half point was broken by the seller, since it's an uptrend, you have to make sure that when a seller is breaking the half point in an uptrend, you have to make sure that you have to record the response of the buyers. The response of the buyers was good, and you can see the sellers were not so strong here. The buyers made a strong candle, so the next candle also went up, next candle also went up. You understand? So like this, you have to basically understand the SNR point when you're trading with the trends. Now when you're trading with the trends, what will happen? You will get many kind of fake breakouts. These are not fake breakouts. This is basically strong momentum coming in and digging into the buyers coming up, and here you see the buyers were not able to close over the open point of this candle. So this candle is a weak candle. Again the sellers came, they could not make a new low. When compared to this, they could not make a new low. So this is again a weak candle. Again the buyers came, they were also not able to make a strong candle. So in this area you should not trade until you see a candle like this, because in the next candle itself, when you see this consolidation area was broken and there is no upper rejection in this candle, that means there are no sellers here. When you see an upper rejection like this, then there could be sellers who will again bring the price down. So this candle was a strong candle, and we are seeing that it is hitting the trend line as well. So this candle could have been our good call option. That is one candle. Okay, now this is one part that you have to notice. Let's try again somewhere in the downtrend, whether we can do something in the downtrend. Okay, So this is looking a little bit choppy, but still we can figure out here. So this is the highest point of open or close, and this is my center point. Okay, and I'm taking one more center point here because I'm seeing the market is too choppy to make you understand. I'm taking the top and bottom center points also of this trend. So these are my top center point and this is my bottom center point. Okay, so now if you see how did the price move, I'll take a screenshot of this. You should also compare the price movement that we have discussed all these sessions. Okay, now if you see here, the price moved like this. As soon as it hit, it reversed, then it moved like this, and as soon as it broke that half, it reversed, then it moved like this to the top point, then it reversed like this, then it reversed like this, sorry, then it reversed hitting this point, and it is reversing again. So you see, you should be able to monitor this. So what happened, it went all the way up from here, it came back here, and it reversed from here itself. Now sometimes it might not follow that center points, it's okay. If it is not touching that center points and it's not playing with that, it's okay, no need to trade at that point, because when you're following a strategy, now you see at this spot, when it crossed the center point, you saw a strong candle coming up, and this candle was fair strong than this candle, plus it was having an upper rejection, and even you can take a second candle, it is having buying pressure. So the third candle could be your trade point. Okay, if you have a doubt, because this is a strong trend, this is a strong move from the sellers, and it broke the half point. So the next candle, the response from the buyers was good enough, but not as good as this trend. So the next candle shows you that the sellers were able to again take it down, but at the end buyers came and buyers closed it as a green candle. So you can take this candle for your trade and you can confidently give your trade here. So you have to start analyzing the charts in this way, analyzing the trends in this way. So this is my extreme point and this is my extreme lower point. Okay, so in this way you will be able to understand the trends. Okay, now when you see a candle rejecting in an uptrend, a candle rejecting from the half line, the next candle would go green. Okay, now you should at least wait for second candle, don't immediately, because this candle, you see, this candle is strong candle, but when compared to the sellers, this is very weak candle, because the sellers have made more stronger candle. So at this kind of spot you should be very careful. You should not trade at this kind of spot. That is why I told you, you have to see the close point, open point, and the close point of the previous candle. So you should match which candle is strong at this place. This candle is weaker than this, and the trend is saying that minor trend is downtrend, the major trend is uptrend, but this is a strong move from the minor trend, guys. So that's why this candle, you cannot take this as a guarantee that next candle would go up. Like this, you have to start feeling the curve trends, and you have to see the SNR. So if you see, the wavy patterns will go like this, and your middle points will help you in understand this. This should be one of the middle point, this should be one of the middle point, this should be one of the middle point, this should be one of the middle point. So whenever the price hits, it reverses, and this should be one of the middle point, this should be one of the middle points. So you will get always that middle point, right? So when you're going in the uptrend, no need to worry about this point, you have to worry about this point, you have to take this middle point. Let me again rephrase it. I think I did a little bit mistake there. So when you have a wavy pattern like this, I will This is your middle point, middle point, middle point, right? So this is the wave's middle point. So you have to wait the candle to break this and the buyers to come up. The buyers should be more stronger than the sellers in an uptrend. Then you can trust that it will go further up. Plus, if you see here, the sellers came, then the sellers came here. So the sellers are moving up like this. Sellers are here, then they moved here, then they moved here, and buyers are moving here, here, here. So it's an uptrend. The logic is correct. Sellers have to move up, buyers have to move up from the bottom. So that is what you have to capture, this point. You have to understand what is happening, what is the fight happening at this point. Similarly, in a downtrend, this is your middle point. So as soon as the price hits here and reverses, you have to take a put option here. So like this, you will be able to easily understand. For example, I'll now take a downtrend middle point. Let's say when the price was moving down, okay, when the price was moving down, so I took this as my reference point and this is my center point for that. You see, at the center point exactly, we saw some buyers coming in, and as soon as the sellers came strong, the next candle went down. So this rule will apply always, and this again, this resistance becomes your support, right? It broke up here and it came back here. So in this way you will be prepared. Once you draw this kind of lines nearby, you can wait until the price comes and hit this, and you can find out what is the price doing at that point. Once you see kind of movement from the buyers or sellers, you can take a trade. Okay, so this is very important. So in today's topic, SNR plotting straight and cross SNR. So the plotting of straight and cross SNR is this. This is the straight, and if you see the cross SNR, yesterday as we discussed, this is my cross SNR. Low to higher high in a loop, and lower high to higher, lower low to higher high, and lower high to higher low. Okay, and this is my center point. So I got an intersection. This is my center point. So I'll take this as my center point, and let me remove that other two cross lines. Never mind, I'll do one thing. I'll create a middle line. Okay, so approximate, this is the middle line. Okay, so as soon as you got, this is your SNR, this is your cross SNRs, because SNRs are not only in straight lines, SNR are also in cross line. Now SNR will work when there is a ranging pattern, like when there is a ranging pattern. Let's take a ranging pattern. When you create a ranging SNR, let's say this is my highest point, this is my lowest point, and this is my highest point. When you create a ranging pattern kind of SNR, it will work. The SNR will hold it. But if you create such kind of straight lines during a trend like this here, if you create a kind of here as a straight line, you see this was ranging here, this range was broken. For example, if you take this as your range, when it hit first time, it started going up fine. But again, you cannot use that because the ranging pattern here, the range was broken, and as soon as they went up, sellers came very strongly and they eventually broke it. That's why if you take a straight line of SNRs everywhere in a trendy market and you keep waiting that the price will come here and it will reverse, no, it will not reverse, because in a trendy market you should take cross SNRs or the center points. That will work very nicely. Whenever you see a lot of ranging type, then you can take straight SNR. So that is what some traders will do. What they will do when the market is ranging like this, okay, when they see this kind of point, they will understand that this market is ranging, and here as soon as it hit this range and it is reversing, now they know that okay, it has this buying candle has come and it's a kind of ranging. You see it went to this top high and it came back. Now there are different types of ranging, guys. Now this is a ranging of 1 2 3 4 5 minutes candle. Okay, in a 5 minute this will look like a ranging market, one green candle, one red candle, but in 1 minute the ranging is like each one candle, like one red, one green, one red, one green, like that. You will see lot of ranging candles. So you have to understand that whether it is ranging in 5 minutes or whether it is ranging in 1 minute, you have to understand that. Like for example, this is a ranging market. Okay, and one pattern that I will explain you today is in a ranging market. That means your trend is a straight, your trend is ranging between 1 point oscillating. In such kind of scenario, when you see a candle, strong red candle like this, and then you see a small doji kind of red candle or a kind of doji, the next candle would go up. This pattern is very strong pattern. Now here this is a very strong pattern in any kind of ranging market. Now if you see this part, you can say that this is a trendy market, but at this point, from till this point, it has been ranging because it is one candle, and here you got a doji, so it will go up. Okay, so if you see, even small waves will consolidate, that is the range, and then they will go up. This is, let's say this is a 5 minutes wave. 5 minutes wave is showing you like this, but in 1 minute it would be like this. It will be like this. It will range and then it will go up, then it will range, then it will go up, then it will range, then it will go up, like this. You understand? So you have to keep all those things running in your mind. Now how do I keep all those things running in my mind? That's very important. Look, when I'm saying to take a trade, let's see here. When I'm seeing this candle, what is running in my mind? That is very important. Now I'm seeing the major trend is uptrend. Okay, the minor trend is downtrend, but the downtrend is very weak. The major trend is pushing the price up, and my next seller area, that from where I got a significant move of the price, that was here. So the next seller area is here. Major trend is uptrend, minor trend is downtrend, and the candle is very strong in the up direction. So I can go with a call option in the next candle. Okay, that is how you have to understand. Now you should not keep zooming out, zooming in, zooming out, zooming in to understand major and minor trend. Once you understand that, you have to feed it in your mind. Once you saw a chart, major trend, minor trend, okay, candle, then your concentration should be fully on candle formation, not on the major or minor trend. Because if you keep monitoring the major or minor trend, what will happen is you will not focus on the candle formation. You see, because I focused only on major and minor trend, I did not see the exact formation of this candle because I missed the fight. When I miss the fight, I might lose the trade. And this major trend, minor trend, next resistance level or next support level should be running in your mind. Like when you drive a car, you don't see the gear before changing the gear, right? You don't see brakes before hitting the brake. It's all feeded in your body. Your leg knows that okay, here is my brake and here is my accelerator. Your hand knows that okay, here is the gear. You keep your eyes on the road, but you shift automatically, your body shifts it. So you have to train like that. You have to get trained like that. So as soon as you see a thing, you see a kind of major trend and minor trend, it is in your mind. Then you should go in close and you should see what is happening inside the candle. Only then you can predict, okay, whether in the next candle I will get buyers or not. Okay, now if you ask me now what is going to happen, let's see. The major trend is uptrend, the next seller's area is here, the next support area is here, and I am seeing a candle which is bigger than this candle. So this is a seller candle, but this candle is getting bigger, or if it closes equal, the next candle could go down because it is consolidating in that sense. but if it is not, if it is closing above this, next candle would go up. I did not see that push from the buyers, so most probably this candle will go down, because here I should have seen that push. The buyer should have pushed it and taken it up, but they did not. They in fact closed it at this spot itself, so that's why this candle could go down. Okay, let's see if this candle goes down like this. Plus the momentum is very important to understand. If the candles are forming very slowly, the sellers might come, but after a minute's time. The sellers might come, but after 1 minute, the next candle could not immediately go down. So that momentum, the speed of the candle is very important, that you have to understand. Okay, so you have to monitor that momentum. In that, in another session, we are also going to discuss about the momentum, where we can understand who is in the control and whose momentum is strong. So here you see we lost that. If we would have taken a trade, we would have lost it. The sellers came, but they came in the next candle because the momentum was very slow. The sellers came. Now I can see a strong impulsive move from sellers. They came very strongly. Okay, so like this, you should be able to match your trends, your activities, and your mind. You should train yourself, and it's not a big deal. You can train yourself. You have to just keep practicing. You will train yourself. Okay, so that is why, guys, you have to understand the momentum of the market. If the momentum is slow, the candles are forming, but they are forming slowly means the trend will continue at least for one more candle and then reverse. Okay, and in the next thing, what you have to see is, when you see a strong candle like this kind of momentum, and you're having a SNR level here, like resistance level here, what you have to do is, when you're having an SNR level here, what you have to do is, you have to wait for a small sellers to pop up like this. If a strong momentum comes, it will surely break that SNR. Okay, because the trend is much stronger than the SNR. That is what I'm trying to explain you here. Trends versus SNR. If the trend momentum is very strong like this, you are keeping on seeing, you see this was a kind of resistance level. The trend was strong here. It just broke that. It broke all the limits. Okay, so like that, you should monitor that. Whenever you are plotting an support or resistance, anywhere in the middle point or in the topper point, when you see a momentum, when you see candles forming green and coming towards that resistance, you can expect that to break that level and then reverse. Even if that is support or resistance level is strong, it will still break it and then it will reverse. So let's see if we have some candles like that. For example, this is one classical example, you see. And okay, the candles came very strongly. It reversed, but it first broke this level. If you see, this level could be a strong level, right? Because here you have a strong candle, then it followed, then, but here you got a kind of momentum, and as soon as this momentum came, they broke this level and then they reversed. Okay, so this is the extreme point here, by the way. This is the extreme point. It didn't touch that extreme point, it reversed before. Okay, strong versus weak SNR. Strong versus weak SNR is nothing but, if you see this kind of candles in between the trend, that means this was a weak resistance. That means this resistance was weak, because as soon as the candle hit this and closed at this level, we saw a retracement candle. We didn't see a reversal candle. A reversal candle will be much bigger than this particular candle. So this is a kind of weak SNR, weak spot. It will reverse the price when it hits next time here. Maybe it will reverse. It didn't hit yet. It will reverse. Look, it will reverse, but it will reverse only for 1 minute or 2 minutes. You see, here there is no doubt. Here there was some event occurred, or some high buying pressure came in. That's why the candle touched that high. Okay, so, and there was some lot of choppy market here. So usually what will happen when you see a kind of weak retracement candle appearing in between and the trend continuation, that means that is a weak support level. It will reverse. It will not reverse for a trend changing kind of thing. It might reverse for a couple of minutes or 1 minute, and then the major trend will follow. Okay. Candles closing at SNR. This is very important, guys. You have to understand any candles that when they close directly at the SNR level is a sign of short reversal. Look, this candle, for example, this is a Morobozu candle. The format is called Morobozu. So there is no upper rejection here. So in that case, it will reverse at the SNR level. I'm not talking about in the middle of the trend. Look, here also we saw a kind of Morobozu candle. There should be a level here somewhere. Even this is a level. Yeah, because previously you see the sellers came from this part. It is stopped exactly at that level. Let me draw a line to clear it. Because the sellers came here itself and it stopped exactly at this area. So it will reverse at least for a minute. Now in terms of red candle, it has to close exactly at the level of the support, then it will reverse. Okay, most of the time. So I'm not saying guaranteed every time it will reverse. Most of the time it works like that. Okay, so you have to keep on monitoring this pattern, guys. What you have to do, you have to draw that SNRs, and for example, you have to, let me take a new one. You have to draw those lines and you have to see how the wave is acting on that, how your trend wave is acting on that, like this. Then you will start feeling the wave. Once you start feeling the wave, you will come to know, okay, at this point the wave is going to turn, at this point the wave is going to break, because you will see lots of red candles here and you will feel that, okay, this will break, after this level only it will reverse. So those kind of things you have to start noticing now. If you start noticing those and you keep on practicing, you will be able to make up a good kind of knowledge on this particular SNRs. Now SNR I am using here only for references. I am not an SNR trader. This is only my references, that okay, from here it might reverse, from here it will reverse, from here it may not reverse, from here it might break. Okay, so this is only for reference. I am usually trading with the trend. So SNR is just for my reference to make sure that I don't trade at a wrong spot or lose the trade. So plotting SNR, okay, angles of trends. Now angle of trend, when you see a kind of angle, let me take a center point. Let's say this is our center point. The curve is like this now. So angle of trend, when it is greater than 45%, now we know that 45%, 45 degree angle means it is a right angle is like this, right? Okay, let's say this is a box. In this box, if I draw a line like this, okay, so this is my 0 degree, this is my 45 degree, and this is my 90 degree. So this is how you would have studied in maths, right? This is my 45 degree. So if I keep this line here, if the angle of the buyers is going above the 45 degree, that means it's a strong candle, it's a strong trend. Okay, it's a strong trend, it is keeping on pushing. If the angle of the trend is lesser than 45 degree, for example, I'll take the same line of 45 degree and I'll keep here. This is also a strong trend. This is also a strong trend, but our center line is also here. So you see, if I keep it here, in this area it was strong but it became weak, then after that it couldn't recover it. So 45 degree, above 45 degree. It is not for your practicing purpose, just for your viewing purpose. You don't practice with this 45 degree. It is just for your information that if you see a candles forming above the 45 degrees, that means it's a strong trend. But again, you have to make sure that it is not lengthy candles. Okay. Reversal with trends. Okay, consolidation at SNR. Now I think while discussing all these points, we went through the consolidation also, because sometimes price will start consolidating at an SNR level. The candles will be of equal size mostly. It will not be of different sizes. Red green will be of equal size, and in such cases what you will find is, now consolidation could be of 5 minutes, could be of 15 minutes, could be of 10 minutes, could be of 1 minute. So that way you have to understand. So when you see red patterns, try to avoid, don't trade there, because those are under consolidation as long as the closing point is same. For example, here it was a consolidation. Okay, then you see this was 2 minutes consolidation, then still it is under kind of consolidation, because the candles are straight. The price center point, if you see, it's straight. The wave pattern, if you see here, because the wave pattern we are drawing from the middle of the trend, if you see, it is straight. So in such case, it is not good to trade, because it might go down or it might go up. And just a moment. So now what you have to do is you have to start practicing on this concept, and you can also draw your regular support line. If you are used to a regular support line, draw your regular support lines as well. Draw two lines like this, and then you take a center point, include this center point, and you see how does the price moves in between. Okay, just let me show you in this chart, if I can show you something. Okay, so let's say this is my lower and upper support, and this is my center line. I mean the line from which I will take my center point. Okay, so I will also take one more center point. Approximately this. Okay, so let me take a screenshot of this. So now you have to compare this kind of movement with your price, how it moved like this, moved like this. So when you're seeing this, you can see that the patterns have started coming down, and here it has consolidated. Now it is trying to go up. Okay, so if the market is not good, it is not running with your analysis, then avoid that market. For now, avoid that market. Once you have experted, once you are expertised in this kind of movements, in this kind of markets, then you can come into this. Otherwise, just take some trendy markets and try to do it on the trendy market. Initially, you should be doing it on the trendy market to understand better, and later on you can use it on the choppy market as well. So with this, I would like to wind up this session. Now what you have to do is you have to keep practicing. You have to compare your waves along with your SNR, and you have to take the center points so that you can understand the pullbacks will occur there, and from that point it will go up. You should also do that. Okay, and if it is not obeying your center line, try to take the center point of the first half, center point of the first half, and see if the price is reversing from there. So that will give you a kind of good understanding of how the price moves at that. So as I told you, if from the center line itself, if the price is getting a rejection, let's say this is my center line, and if the price is getting rejected from this line itself directly, then you can take a trade on the next candle, because if this is a center line, now this is, if this is a center line or no, I don't know. Let me see. Okay, this is not the center line. Let me take a proper center line and show you. So this is my center line. So you see, when you see a rejection like this, rejection of buying candle from the center line itself, next candle would go up. Okay, that way you can start analyzing the trend. Only the first time, or don't keep on relying on it every time. Only the first time when you see that, you can do it. Don't reuse that level multiple times. Don't trust that level multiple times, because every time it reverses, the second time when the sellers come, they come more strongly. In a downtrend, the second time when the buyers come, they come more strongly. That is why the price is trying to come up. So you have to understand that here the price is trying to go down. So the market wants the price to go down. That story should run in your mind. From here the price wants to go up, the market wants to go up. That also you should keep in your mind while taking trades. Okay, so for this session you start practicing, guys, and if I was too fast or something, you have to repeat this video and view it. And if you didn't understand something on this, please review, write down the points, and in your last after the last session you can send me the email. I will answer you. I'll prepare a video on that and I'll explain you further. You should repeat this video a couple of times to understand completely, because the part of the trends and SNR is totally different that other people are viewing and what I am showing you here. But it will work for you if you practice it properly. If you don't practice it, then doesn't matter. You see how many videos, you will never get to understand it. Only by seeing video you will not understand it. You have to practice it. Okay, guys. So see you soon in the next session. For now, start practicing on the SNR and try to understand different SNR concepts also. You might be knowing some other SNR concepts. You can apply those with this and you can check out. In this, what I am doing is I am taking the center point and I am working on that, because on the center point I know that there is a high level where the resistance is there and where there is a lower level where there is a support, and in between how the price is reacting. So I am trying to capture that pullbacks. Okay, so that is the strategy here. I'm trying to capture that pullbacks, and after that pullbacks, major reversal will come up. Okay, guys. So for now, goodbye. See you in the next session.